Hey, it's Brian Shannon from AlphaTrends.net. Today's Friday. It's the 3rd of February, 2017. Let's take a look at these closing numbers for the market, then we'll look at those charts. But we did manage to close positive for the most part here in the equities. S&P gained some ground, as did the Russell 2000, the biotechs. And we had a little bit of weakness in the Nasdaq 100, semiconductors, and the Dow. But things obviously rapidly improved here today. So let's take a look at the action on the charts and make some sense of it and see what's going forward from here. We remain above that trend line and the volume weighted average price year to date in the S&P 500, as well as the 10, 20, and 50-day moving average. So as I told subscribers all week, when we see a week open like this, we have to frame it and say, well, where does it have the potential to find support? And it did so right at that trend line that's been intact since the beginning of the year, as well as regaining the year-to-date volume-weighted average price and holding that as support. So today, obviously, we gapped higher, and then we saw what often happens on a gap higher day like this, which is a quick little pullback, and then it regains the daily volume-weighted average price and goes on to close near the high of the day. So the market continues to be quite healthy here. Anyone who's short it will continue, I think, to be frustrated because the longer term trend remains higher. And as we noted last week, the consolidations, we give the benefit of the doubt to the longer term trend, which is still clearly higher here. Looking at the weekly and monthly chart, we're at all-time highs, and that's not what bear markets look like. And if you're looking to be the hero and pick the top, that's it's a very low probability way of approaching the market. It's best to move to the sidelines and cash when you're uncertain, and then reemploy your money into the market when you have confirmation that your theory is actually folding out, not just playing guessing games. So, by the way, the Alpha Trends annual subscription sale is due to end today. I'm extending it through the end of the weekend. I will be on vacation all of next week, so I'll be giving an extra week for those who do decide to sign up. But save a lot of money on this annual subscription and get this type of analysis each and every single day, as well as individual stocks. The Nasdaq finished slightly lower for the week, but still a very positive trend here. And in an uptrend, these pullbacks, these pauses, refresh the market. They give it an opportunity to undergo some normal profit taking, but there's nothing bearish happening here in the Nasdaq. In fact, for next week, I think the more important level we'll want to see hold will be about 124.75 to 125. If it continues to hold above that, I would expect to see further new highs. In the Russell 2000, looking at the daily chart, we're holding above. This mark has obviously been weaker, but we are still holding above the volume weighted average price since the election. The year-to-date volume weighted average price has been just back and forth, as this market obviously has been back and forth. But this consolidation has been in a fairly tight range, really. And my thought is that it's building energy for a continuation to the upside. We found some support near the rising 50-day moving average this week, and we've obviously got that trend line to deal with, but we've got a little bit of a band of resistance up near about 138. The ideal scenario would be that it maybe runs up to that level next week early on and kind of gets up there and then pulls back, stabilizes a little bit, makes a higher low, and then breaks higher. That's what we would be looking for in an ideal scenario. If you look at this weekly chart, I mean, that's a nice looking flag pattern, and they tend to resolve in the direction of the primary trend, which of course remains higher here. This market outperformed last year. It's spent some time building energy here over the last couple months. My suspicion is that it breaks higher, but I would want to wait for price confirmation first. We anticipate price scenarios, and then we participate once we have the actual evidence, and then our job is to manage risk. The semiconductors have been the big winners last year, and then this year so far, they're turning into no reason to think that this trend is going to dissipate at all. We still have higher highs and higher lows on that weekly chart. Here on the daily time frame, we're still, can't even close below a rising 10-day moving average. So clearly the buyers remain in control here, and we're well above the year-to-date volume-weighted average price. We regained that 5-day moving average this week, and a key level of support going forward would be 74 and a quarter. It wouldn't surprise me next week to see maybe some sideways consolidation in the semiconductors, maybe pulling back down towards this level, stabilizing and building a little bit further energy. Right now, I think it's maybe just a little bit overdone. The biotechs really behaved well in that we had mentioned early on in the week on this little spike, I said, look for some consolidation here. And then when it got down towards the 5-day moving average, which was also the daily volume weighted average price, I said, look for support here. And then it took off nicely from that level and made a higher high above the flat to rising 5-day moving average. And now this market is headed for this trend line that's been intact since mid-September. Now, the good thing would be a couple things here. One, we're above the year-to-date volume-weighted average price. That's down near the 20-day moving average. You know that we've been talking also about the volume-weighted average price from January of 16, which we're now clearly back above. So that's a good thing. We've got the potential for sellers to show up at this trend line. They've been there before. So I certainly would look at this and say, where has it come from? Meaning it came from 267. That's where it's come from, up to 283. Where does it have the potential to go before it's likely to encounter sellers? And I think you're in that area. It doesn't mean I would sell it short because there's no evidence that the sellers are gaining control, but it tells me that from a do I want to add money here, a risk reward standpoint, the answer to me is no. What I think the better scenario for next week would be in these biotechs is maybe even run up through there, get some people sucked in late, then pull back down towards the year-to-date volume-weighted average price and the 5-day moving average, create a higher low, and then build some energy for a break of this trend line. But even a break of this trend line, we've still got to, getting back above here would be the next level. That would give us a higher high in the longer term time frame. But right now, it's building. There are signs that they're acting better, but it's not full on bullish right now. Apple had a great week. Of course, we know that they had earnings, and this stock continues to rally. It's holding above the low of the gap even. I would say a stop would go either there or maybe somewhere underneath the 5-day moving average, which will be starting to catch up to prices. The bonds lost some ground, and rightfully so. They're in a downtrend, and we know that we don't trust rallies when we have a declining 50-day moving average. A lot of people were thinking this was bullish. I kept saying that the trend is still lower. Expect this to fail. It's more likely to fail than it is to reverse. And now we're maybe undergoing some consolidation, further consolidation, maybe becoming neutral, but the bonds are still in a longer term downtrend. And, the best case you could say is they're at a potential level of support here. NVIDIA, if you've been following my commentary on that, I've been doing a bunch of tweets on it. Right over here, I warned that it looked like it could pull back. We identified where it should pull back to, and lo and behold, it did that almost to the penny, which was the volume weighted average price from the November low. And then we had looked at the volume weighted average price from the peak here to say, here's where the buyers regain control. And now they are clearly back in control. They've been in control, and they made that higher high above the flat to rising 5-day moving average right here at this point, and it continues to be bullish. Now, the company has earnings next week, so if you're holding this long, I would say if you get a spike up, especially near last year's high, at least take some off. The risk of holding to, in my opinion, isn't worth it, but do what's right for you in your time frame and where you own it. If you own it here, I'd say you want to start thinking about where to take some off. A stock that looks good for next week would be ATI. ATI. I tweeted about this one this week because we had a high volume event here. That is, the stock broke beyond this resistance on a gap, and it's consolidating on ever decreasing volume here, but it's holding on to those gains. It's holding in a nice tight range. And this ATI, when we go back to a weekly time frame, you can see that it broke a very important level of resistance over the last several years. And if you ask yourself, where does it have the potential to go before it's likely to encounter a source of supply, which will act as resistance, that would be up near about 27, 28. And look down here at the short position. There are 20 4 million shares short. Let me show you another great way to use the volume weighted average price. You can use the volume weighted average price by, well, first we'll draw a trend line across this right here and say, okay, this is where we are. So basically, what this tells me is anyone who is short the stock underneath this line is losing money. So how many people are short below there? Well, let's look down here. When it first broke below that level, we had 8.3 million shares short. Today we have 24 million short. So even, below that line, we have up to this level 24 million shares short. That tells me that the people who added from 8 to 24 million shares, so they've tripled their position up to 24 million shares. 16 million shares are short underneath that line. What's the average price since it's been under there? So we can take this volume weighted average price tool and click it in where it goes right there. And you can see the volume weighted average price since this date right here, when the short position was 8 million shares, has gone now through today, is at about $15 a share. So they've added 16 million shares at an average price of 15. Let's give them the benefit of the doubt and say they added it all up here at $18 a share. If that's the case, they're still losing money, and this is a good potential short squeeze candidate because the shorts are trapped here. Now, I've been looking at this one the last couple days. The momentum just isn't there yet. The volume weighted average price since that gap, you can see that's the purple line. It's just been crossing back and forth above and below. Next week, I think for this stock to regain the momentum to the upside, it's going to have to clear this little peak right here. And if it were to break below the low of this consolidation, that would say it's time to move to the sidelines. So if you look at it from the standpoint of, if you think it's going to get above this 22.30-ish with a stop, let's say $1 away, what's the potential upside? It looks like a decent risk reward ratio, but of course it depends on your personal time frame and what you look for in the market. Adobe had a good day today as it broke a trend line and some resistance that we were looking at that in Alpha Trends today. Let me show you another example of a unexpected maybe area of support for a company. So if you look at Amazon today, you look at where it came down to, and you can say, well, it had prior support here, so maybe that's why it's finding that level to consolidate today after earnings. But what I think is more important right now is the year-to-date volume-weighted average price in shares of Amazon. So if we take a look here and we draw the volume-weighted average price in, you can see that came together with this prior support, and that's what it's trying to hold right now. So I think that Amazon is going to need some time to heal itself if it's going to go back to the upside. This is a good place for it to try to heal, but we'll see what can happen here. A lot of people are probably calling this a double top. A double top would not be confirmed until it breaks below 740, and it would give us a target of 640. So don't listen to those double top projections because they're the same people that said this was a double top over here as it backed away for one day. One day doesn't make a pattern. So that'll do it for me. Again, if you want to save money on an Alpha Trend subscription and look at the market from a structural standpoint and look at it from the point of the way that money flows cyclically through the markets, I'd be happy to have you as a subscriber. And again, I'm going to continue that through the end of the weekend. Have a good weekend, and I'll talk to you in a week or so.